Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Bhatnagar, and I'm with you with the area of ABFM. If we're talking about Module C in the last class, so continuing with the same level, we are just finishing off our revision. So let's continue further and finish our Module C. Okay, the first chapter in the particular Module C is related to the corporate valuation. How is market value calculated in corporate valuation? By analyzing the recent transactions in the market, by determining the net operating income of the company, by summing up the fair market value of the net assets, by assessing the number of outstanding shares multiplied by the share price. Corporate valuation means to value the specific organization. What is its worth? Okay, so in this case, the correct answer should be D. By assessing the number of outstanding shares multiplied by the share price. What are the four methods used for determining the value of firm? Market value approach, income value approach, cost value, and enterprise value. Book value, market value, debt value, and equity. And then we have adjusted book value, stock and debt, then direct comparison, discounted cash flow, market capitalization, earnings approach, asset approach, debt approach. What's going to be the answer, everyone? The four primary methods used in determining the value. See, when we talk about the corporate valuation, it's a very important area. When we are trying to value the firm, the first thing that we should do is adjusted book value. We are trying to find the book value after making the adjustments in it to get discounted based. Then we have the stock and debt approach. We have direct comparison, where we compare with one of the similar organizations which exist in the same market. And the last is discounted cash flow. The answer is C. How is the value of land typically determined in the corporate valuation? Subtracting the physical depreciation from the cost replacement, then calculating the market price of the comparable and used assets, assessing the market value as if it were uninhabited and on the market, and adjusting the net book value based on the remaining life of the land. What's going to be the answer? How is the value of the land typical? See, when you are valuing the land, a land does not depreciate. So in this case, first of all, we'll be treating as if the land is not taken up by anyone. We'll be treating as if this land is not used at all. So first of all, we'll be finding that value based upon that. When we have building and all now, then we try to cover it up with the particular neighboring areas as well. Okay, what is the value of the neighboring houses and how do we take care of it, right? Done. What is the primary focus of rate comparison in the valuation? Determining the highest and best use of the property, identifying the comparable properties that have sold, adjusting the comparable sales value, assessing the inherent and observable qualities of the property. What's going to be the answer, everyone? Direct comparison method is basically used for those areas where we are talking about those specific things altogether, no? Isn't it? We would like to know what has been the value there, right? Chaliye, let's try and find it out. The primary area is, as I told you, when we talk about rate comparison approach, we would always try to find out the properties which are similar to ours and how they are sold. For example, if I look at any of my neighbors, what kind of properties they constructed and how are they living in that particular property. That is what we'll be covering in this area, right? Identifying comparable properties that have been sold. What components can be added together to arrive at an estimate of the company's value? NPV and intrinsic value, continuing value and book value, value of free cash flow, continuing value, non-operating assets, salvage value, and residual value. When things are added together and we are trying to find the value of first is free cash flow. This is we are trying to find only the cash inflow and outflow. Nothing related to any other non-cash thing. It's a continuous thing, and at the same time, we will also be having non-operating assets involved in it, right? This is the answer. C. Next question is, what does the cash flow valuation, discounted cash flow valuation, serve as according to Chennai? This is not a passage or something, right? So just removing this part. What does the discounted cash flow valuation provide? But the discounted cash flow valuation agrees that whenever we talk about time value, say I get money today, I get money after 2 years, the value of the money would be different, isn't it? It's not going to be the same. So how do we work upon this area, everyone? See, discounted cash flow valuation really tells about the time value of money. It makes sure that we are very clear about the time value of money because again, um, it has to be adjusted. है ना? So there are different ways through which it can be done. Not one way. The only method for valuation, this is not one of the methods. This is actually one of the methods. The basic basis upon which all other methods are technique, then there are certain methods which are non-discounted as well. A less effective approach to relative valuation and primarily used in real estate. Uh, then see, this is not the point, this is also not the point. Then after eliminating, the answer would become this. There are many valuation techniques which are based upon discounted cash flow, and rather this becomes the basic. Some are related to it and some are not related to it. This becomes the base again. That brings more clarity. So it's the basis upon which all the valuation techniques are constructed. What is the concept of free cash flow to equity in discounted cash flow valuation? Cash flow available to equity investors after all claims have been met. Cash flow before tax and interest. Cash flows to tenders and preferred stockholders. Cash flows available to equity investors before reinvestment. What's going to be the answer? Free cash flows to equity matlab after making, see, equity gets the money after everybody else has got the money. Matlab first of all, debt people, tax people, right? We pay all these things after debt. Then the second thing is, this is in a normal case. First of all, we pay the interest, then we have depreciation, and then we find the tax payable. After we pay the tax, first of all, we pay the preference shares, and then whatever is left goes to equity. So in this case, cash flow is available to equity shareholders after all the claims are met. So basically, this is related to A only. First of all, we pay everybody else, and whatever is left. That's why I call them scavengers. They live on whatever is left. It can be more, it can be less. It has always been their fate. Whatever is left is something that they will get. If it's more, it's cool. If it's less, then they have to settle. In terms of what is the concept for FCFE, everyone? Achha, this is the same question. So go ahead and answer. Cash flows before interest and tax? Nahi, because obviously it cannot include only the interest and tax. Na? It has to include other aspects as well. They said the cash flows of preferred and lenders. It's not about the preferred. It's actually about equity and preference shareholders. So basically, the answer is still gonna be the same. Done, everyone? What is the primary focus of relative valuation? In the comparison of discounted cash flow valuation, predicting future trends, comparing an asset worth or to the prices of similar assets, estimating intrinsic value, or analyzing historical data. The correct answer is comparing an asset worth to the prices of similar assets in the market. We are comparing the assets with the other. Acha, what does a PSU disinvestment involve? Public sector undertakings went into major losses at one point of time. They were forced to go into liquidation. What was the reason behind that? Basically, many of these units had turned sick. That means their net worth had become so negative that if we would have let these organizations live, that would have caused more problem. Not only for them, but eradication of the funds of the entire country would have been done when we would have allowed these kind of organizations to live further, because PSUs had brought so many losses that led to a situation where India had lost a lot of money. So technically many PSUs which had negative net worth had to leave, or they had to be sold. Let's talk about that particular part. This investment, the negative net worth, that is called negative net worth. How does it become? The net worth includes your share capital plus your reserves and surplus. है ना? So in this case, if they have too much of accumulated losses, say it is of 20 lakhs and share capital was barely 10 lakhs. So this has turned negative because of too much of capital, है ना? So what's going to be the answer in this case? The strategic investor of public buying a portion of parent company, the sale of business division to another, transfer of ownership between two companies or demerger of a division. The answer is A. A strategic investor or the public buying a portion of the parent company. Done? In the make or buy decision, what is the key consideration when deciding whether to produce a component in-house or purchase it from an external supplier? The historical cost, the book value, expected contribution margin from selling the component, or actual cost of contribution compared to purchase price. I'm sorry. Hanchi, what's going to be the answer? Basically, when you are taking a make or buy decision, ki matlab we should prepare the particular thing on our own, manufacture it or buy it. It is always based upon the fact that what is your actual cost and what is your purchase price. It is based upon these two things. Okay. When the considering outsourcing an activity or service, what is the critical factor that should be assessed in addition to identifiable costs? The market price of the outsourcing service, the competitor's outsourcing strategy, the reliability and confidentiality, commitment of outsourcing agent, or historical performance of the outsourcing activity. The answer is C. The reliability and the confidentiality commitment of the outsourcing agent. ठीक है? The answer is C. How is the value of a subject company determined in the relative valuation? Relative valuation matlab comparing one company with another, है ना? That's how we try to find out the things. What's the answer, everyone? By applying the multiples in terms of the valuation, by using discounted cash flow calculation, by analyzing historical pricing trends, or comparing its market capitalization with industry averages. The correct answer in relative is by applying average multiples. You're going to compare ultimately, na? What's going to happen, isn't it? Chaliye, that's it for the day, everyone. But before I end the particular session, everyone, I hope you have taken a look at our courses. If you haven't, then why not? Because at this point of time, we are up to something, and I hope you have reviewed that. Let me tell you exactly what we have done for you. Uh, just a moment. In the CAIIB area, we are coming up with another batch, I believe. So you'll be able to see that particular batch soon. See, just go to our website, that is www.adda247.com. Go on to the area of JIB and CIB. Okay, in this area, go on to the area of CIP June 2024. First of all, double validity is going on. Go ahead and buy it because you get it for 2 years, and that too, this is for 6 plus 6 months. So that means you're getting it for 1 year altogether, and you just have to use the code Y541. Okay, na? So all you need to do is use the code Y541 and apply it. As you can see, the discount would be given to you of 79%, and you will get it for barely 6823. That means you would overall you are not even paying 500 per month. You know, this is the entire scenario where you are buying the Mahapack. In Mahapack, it includes our regular batch, our revision batch, our MCQ batches, whatever we are coming up with, or even the bilingual and English medium, all the test series, ebooks, and whatnot. Everything is covered there. Once you go for this one, there is no need to look at any other Mahapack because this covers everything. Not even a single penny is required to be paid in terms of CIB if you take this particular pack. Okay, so go ahead and